Welcome to Illuminati Silver. We tell the truth about silver. Today is Wednesday, the 18th of March 2020. And earlier today we produced a video ideally suited to those who are now likely to find themselves at home for a considerable period of time. This video is entitled Having to Work from Home, Then Do Consider This. And yesterday, a most substantive video entitled Do Not Pay Premiums for Silver Eagles before listening to this, which we seriously recommend you do listen to, please, especially if you're considering purchasing silver coins of any description, as it's all equally relevant. Now, we published yesterday's video at 1400 hours GMT, and gold at the time had fallen to $1,492 an ounce, and silver had also fallen to $12.46, producing a gold to silver ratio of 119 to 1. Well, we're producing this video today at 10:30 GMT. Another early video, and gold and silver holders will probably be a little unimpressed in that their prices are little changed from our last video, though they have been higher late yesterday and earlier this morning. Gold is now currently $1,490 and silver $12.40, with a gold to silver ratio of 120 to 1, although it had twitched up to 122 to 1 at one stage yesterday. Perhaps the larger news is that gold and silver have in fact risen much more in sterling terms because of the fall of the sterling against the US dollar. You know, that currency you're constantly told by pumpers is on the verge of collapse. Currently, sterling is the equivalent to $1.20, and only 10 days ago it was as high as $1.31. This has meant that in sterling terms in the past 24 hours, gold is up £34 to £1,242, compared with a dollar equivalent of $22 over the same period. And silver is up 31 pence, with a dollar equivalent of being up some 22 cents. And usually that ratio is the other way round. Usually it's up or down more in dollar terms than it is in sterling terms. Now, yesterday, equity markets in the United States regained some strength, with the Dow Jones closing up 1,048 points at 21,237. The S&P 500 up 143 points at 2,519, and the Nasdaq up 430 points at 7,334, rises of between 5.2 and 6.2%. Now, UK and equity markets were also up yesterday, but have opened down this morning, so let's give you a few examples. The Euro Stoxx 50 index closed up 80 points at 2,530, but is currently down 134 points. The FTSE 100 index closed up 143 points at 5,294, but is currently down 270 points. The DAX index closed up 196 points at 8,939, but is currently down 436 points. And the CAC 40 index closed up 110 at 3,991, but is currently down 187 points. All reducing more today than yesterday's rise, with a spread of between 4.6 and 5.3% falls. Asia markets are also down overnight. Oil prices are considerably lower, with Brent crude now as low as $27.74 a barrel and WTI crude at $25.30 a barrel. The US shale industry must be hurting hard at these levels, though it will bring down the costs to other industries, able to purchase oil, petrol and gas now at significant bargain prices. The star performer really at the moment is the US dollar, with the spot index currently standing at 99.65, just shy of that psychological 100 level. A level, in fairness, predicted by Eric Townsend on this channel back on the 2nd of May 2019 within the Inner Sanctum, and then later released earlier this year. A level no one really believed at the time was possible, when the talking heads were predicting the dollar's demise. As we have stated so often on this channel, and likely to continue to do so, when things turn sour globally, then expect a flight to the US dollar, as it is, fortunately or unfortunately, depending whichever way you look at it, the best of a bad bunch of fiat currencies. Also yesterday, there was a fair amount of financial news released. Retail sales were down in February quite considerably, minus 0.5%, compared with a positive 0.6% in January. Industrial production, though, was up by 0.6% compared with minus 0.5% in January. Business inventories for January were down 0.1%, marginally lower than December's figure. Now today, the FOMC meeting and Fed Chair Jerome Powell's press conference have been cancelled. Clearly everything they had to say was said Sunday evening and then again yesterday. But we did expect, admittedly, a further comment from the Fed Chair today. But perhaps these will now be conducted on an ad hoc basis. Later today, though, we are expecting housing start figures and building permit figures for February. But we are not expecting these really to move markets. Now, from a technical analysis point of view, there are some key determinants in the gold market. There is support at the 1450 level, certainly psychologically. But technically, the main 50% to 61.8% retracement zone is between $1,468 and $1,412. The minor retracement zone is between 1,577 and 1,607. Now, if these zones are broken either to the upside or downside, then momentum is expected in that direction, potentially to as low as $1,232 for gold or as high as $1,704. But please remember, this is technical analysis and a technical assessment, and it's just a guiding tool. There are other factors which affect price too. Now, we have been asked by quite a few subscribers why gold has been driven lower in recent days. And the key rationale or explanation is liquidity, not manipulation, as some people would like to express. It's liquidity. As so many of the pumpers and stackers and gold enthusiasts and talking heads often cite, gold is as good as cash, or as liquid as cash. When I say it's good, I don't mean from value perspective. It's arguably better. And so investors are selling off their gold to fulfill liquidity requirements. Quite ironic, really, that investors are having to sell physical, hard currency assets such as gold in order to raise soft fiat currency to meet obligations and liquidity requirements. No different when you think about it to what a bullion dealer does. He or she gives you hard assets for fiat currency, and then they condemn the value of the fiat currency. Now, this is not something that is revealed in the hidden secrets of money, is it? Also affecting gold is the stronger US dollar. That said, the $1 trillion stimulus package announced yesterday helped buoy gold, thus causing its rise. Silver has performed less well, and this should not now be a surprise to anyone. Industrial demand has fallen, and the monetary demand for silver has been unable to make up the deficit so far. That said, there are shortages of physical silver in the dealers' stores. But listeners to our video yesterday, do not pay premiums for silver eagles before listening to this, will know our take on this. We believe buyers will be foolish to pay $5 to $7 premiums for coins which may prove difficult or unprofitable to sell even perhaps a year from now. If you're going to buy silver, buy scrap silver. You won't get a premium when you come to sell it, but you won't pay a premium either. Look at online auction houses. Call into local pawn shops. With customers not going out, these people will be desperate to sell to you in order to meet ongoing liabilities. To such businesses and individuals, it will now become more a question of cash flow rather than profit. Please do not think for one moment that this is morally wrong to take advantage. You're not taking advantage. You will actually be helping them out and providing yourself with a good deal at the same time. In other words, a win-win situation. Now, in addition, the global bond market is in turmoil. The Italian 10-year yields jumped as much as 64 basis points yesterday, while those on German 30-year debt surged back above 0%. Rates on 10-year US Treasuries extended their advance after clocking up the biggest jump since 1982 yesterday. So there we have it. Equities on the way back down, gold and silver hovering with perhaps more downside for silver, and the dollar remaining robust. All we can suggest at present is buy gold where and when you can without paying too high a premium. Acquire silver if you can get it, again without huge premiums. Ensure you have liquid cash available, and stay tuned to our YouTube videos. Thank you so much for listening. If you haven't already done so, please subscribe to our channel, plus the Richard and Greg channel, which is updated every other day. Not forgetting to press the bell sign so that you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.